From thetraderguy.com, this is Chris taking a look at the British pound US dollar pair for the upcoming 6. There's a reason why I picked this pair to analyze today, and that's because of this candle here. And as I zoom in, you can see just how erratic it was. I'll even go to the 1 hour chart, zoom out a little bit here. And you can see what's happened. During the day, it was suggested, and who knows if this is true or not, because this is Twitter. You have to keep in mind you're trading against robots most of the time that will read headlines and place trades. And I happened to be long of the British pound, and I took profit once the gap got filled. And it turns out it was a pretty good call, actually. Sometimes it's better to be lucky than good. And that's really what today was for me. I was long of the pound based upon this candle here, and then a break above that one. So the following hour, we went higher. It was a small position, so really nothing to write home about. But at this point, we have pulled back. So the question is, why have we pulled back? Well, a German finance minister came out and said that despite the comments coming out on Twitter, Germany had not softened its stance on some key issues with the Brexit. And we promptly fell from there. As a matter of fact, we came back to test this area here that had been resistance, which is roughly 128.75, I'm going to call it. And now we find ourselves at 129. I think at this point, it'll be interesting to see how this plays out. And the reason why I find this such an interesting pair right now is because you can see we had rumors last week as well that turned out to be false, and there you go. That's what happened. I think there's a real chance of that here. If we break down below 128.70, I'm going to call it, the market's probably going to test the lows again. Now, if we can rally from here, I think then we enter consolidation between 129.75 and 129-ish. And then longer term, we need to see this trend line broken. If we get this trend line broken, which means a daily close above 130, then we could be talking about an overall trend change. That's a long-term buy and hold scenario. That doesn't mean it's going to be easy. But right now, you can see just how little it takes to make this currency skyrocket if there's any hint of a resolution to the Brexit. Beyond that, if there's any disappointment, it gives back almost all of it immediately. At this point, I have those couple of areas on the hourly chart that I'm watching. 128.70, 128.70 as support. And if we break down below there, I suspect we're probably going to lose 70 pips. Otherwise, we're going to continue to consolidate in here. Break above this trend line is a longer-term buy and hold situation. I suspect putting on a stochastic oscillator type of system is probably what we're going to see. Beyond that, we also have the jobs number coming later this week, so there's a good chance we may go a bit flat anyways. We may be looking at a relatively flat market over the next couple of days. Although, it's only going to take one tweet, and we're off to the races in one direction or the other again. So definitely keep your position size small. Don't forget to subscribe to the channel. You can come to the website at thetraderguy.com and check out our free Telegram channel. That I'll send videos and updates out to. Thanks a lot.